Welcome everybody to another episode of This Week in Crypto with Santiment. I'm Brian here with a very special guest, Yura. Yura, if you want to jump in and give a quick introduction on yourself, that would be great. And then I'll do a quick recap on the markets.
Okay, I can. Hello, I'm Yura. I'm CPO, chief of product, basically, at Santiment. And I'm really happy to be here and to talk a little bit about what we're doing. Yeah, Brian, go ahead.
Thank you. All right, so we'll do a little segment with Yura here in a little bit throughout the call. And in the meantime, thank you so much for those of you who stuck around for 6 or 7 minutes here while we figured out the stream situation. And we've got a lot to cover. It's been an interesting week, kind of a tight trading range in terms of Bitcoin and Ethereum, but many altcoins have, of course, really danced around. And if you're positioned correctly, you could have done quite well based on what we're looking at here on the screener, where we can clearly see that, certain projects such as Doge, that's really been taking off just in the last 24 hours, Near, we had FTX token doing quite well, Harmony, Oasis Network. These were all projects that had double-digit returns. I should also mention Secret here on the end of the top 100 market cap assets. These were assets that did quite well, and there were some fundamentals that pointed to them potentially having a bit of a breakout. Doge was a very interesting case, and we might be able to get to it toward the end of the call if it's requested. But as always, don't forget that you can vote on the altcoins you'd like me to analyze about halfway through the call. And then that last quarter of the call, I'll spend really going through which those projects that you most are interested in us doing some extra analysis on. Of course, remember that everything that we talk about here on This Week in Crypto is to not be considered investment advice. What we do is analyze the markets based on historical evidence and metrics that indicate exactly where markets typically go when we see these types of bearish or bullish divergences. Nothing is a guarantee. So just keep that in mind and understand that we've got a ton of indicators that we're going to go through, and we will do the very best we can to really show the health of the overall markets by mainly looking at Bitcoin, a little bit of Ethereum, and then, of course, drop some insights on altcoins as you guys request. So that said, Bitcoin currently is sitting at about 42.5K. Ethereum is just below 3250 right now. Looks like about 3240 at latest. And this is just about break even from where we were last week. I know it doesn't seem like it because we had kind of a downtick to start the week. And then over the last I'd say before yesterday, things were recovering quite nicely. And then it kind of, we saw a little bit of a retrace the last 24 hours. But overall, it still looks like Bitcoin and Ethereum are getting a lot of negative sentiment, which is why we titled this episode as something oriented around kind of the FUD that's going on among traders. People are very down on crypto right now. And for those who watch our streams pretty religiously, you understand that when the crowd starts to get very bearish, that can actually be, it tends to be a good sign for the price rebounding and going back up in order to kind of get out a lot of those bearish trades and the perceptions that are going on. Just like with euphoria, right? When you saw the all-time high that was happening about 2 months ago in mid-November, we had a lot of people get bull trapped and the price dropped off a cliff. It tends to happen when people don't think that a price retrace can happen. So right now we're kind of in that opposite spectrum where it looks like a lot of people think Bitcoin and Ethereum won't go up. And historically speaking, that is more a good sign than bad. So why don't we jump over to our social trends really quick, see if anything is coming up as kind of a noticeable topic. The one that I see that's really jumping up is Doge. And what I can do here is I'll Control-click to open it in a new tab. And we can actually see how the social volume is doing. This is the last 3 months of social volume for Doge. And we see that there was a big spike here that occurred as the price. Let's go in a little further because I want to see what happened and when it actually happened. It looks like there was a big social volume spike that was the largest in the past month or so, going back to December 14th. The price proceeded to actually drop and then have a big bounce. You can also highlight social dominance here. And what this is going to show is the actual percentage of discussions related to Doge versus the rest of the top 100 market cap assets. And this actually shows a similar story. It was talked about at this moment during this hour at about an 8.5% clip. So all discussions in crypto, of all discussions in crypto, 8.5% of them were related to Dogecoin. That is pretty massive. So it's clearly a hot topic right now. And typically when you see these kinds of spikes, it leads to a lot of volatility. And I know that's kind of an easy answer to give, but more importantly, based on what direction things were going at the time that it got this big spike, generally it will show either a bounce or a retrace. And what happened was it was on a slight rise when social dominance started to occur. If I remember correctly, this was last night, my time, right before I went to bed, and it proceeded to actually drop, and social dominance has started to fall off in the meantime and then bounce back up. It won't always be this clear cut. It looks like Dogecoin is still kind of a hotter topic than usual. So we can expect to see some continued volatility until things kind of settle down and show the normalized direction of Dogecoin. And we can talk more about it later if you guys would like to see some further analysis on Doge, or we can kind of give more examples of how social volume and dominance are affecting other projects that you guys would like to check out. And also remember, you can break down how social volume and dominance is looking by different platform, Telegram, Reddit, Twitter. It's quite amazing how granular you can get with the data analysis here. So don't forget, social trends here can be a really fun and informative way to see who or what is being talked about in the markets at any given time. We can see NFT, WTF, interestingly, is a hot topic right now. I don't know the context behind Journey Club, but I have seen that it's starting to get some serious traction. So we may be able to make an insight about that later today or sometime this weekend. And also, yeah, I'll come back to some other social trends later toward the end of the call if we have time. But remember that it's always a good idea to see what topics are really popping up, because it's going to give you some pretty nice added context, especially when it's related to like buy the dip or buy the dips. We'll do a very quick rundown of that. You can see that at the beginning of the month, or pretty much 1 week ago, that's when we were seeing a ton of mentioning of buying the dip. It was really the biggest we had seen since May. So right around a 7 to 8 month high in terms of dominance relating to buying the dip. And typically this is good for short-term bursts, but long-term, it's actually bad when the crowd universally believes that it's time to buy the dip, because it means that everyone is doing it together, and whales who are really controlling the market are seeing that this is the crowd perspective, and longs can get liquidated because people are a bit too confident that the dip is going to be bought up, and they're seeing that volume coming in, and then a lot of people end up getting trapped, right? So now we saw it come down a little bit in the early part of the week, and notice how as it was coming down, the price was actually rising. And then here it actually peaked. We had a mini spike followed by another drop down a few hours later. And now we saw another one here earlier today. And then another big drop happened until the buy the dip spike stopped. And now it's showing a very, very slow rise. So always keep an eye on buy the dip. It's the first button you see when you go into social trends, and this will pop right up, and you can see exactly how confident the crowd is that a dip, if it's occurring, should be bought up, if that makes sense. So that being said, let me jump into the Bitcoin metrics here a little bit. I'm going to do just one or two, and then I'm going to hand it off to Yura to give a few updates on his end. And then I'll go back to some more market analysis here. beginning with Bitcoin, we're seeing kind of the same thing that we updated on last week. It has not been overwhelmingly great in terms of the amount of unique tokens moving around on the network. Ever since the early part of December when things were peaking, you can see this 7-day trend line right here and how it dropped off. And ever since about December 14th, about a month ago, we've been in a pretty flat range of anywhere between 155 to 175,000 unique tokens circulating on a daily basis as the prices dropped. Now, this isn't the worst thing in the world because, of course, the prices dropped. You know, if I hold down shift here and I highlight the last 2 months, prices dropped since the all-time high about 35%. But circulation, the trend here, has dropped about the same, negative 33%, give or take. But over the past, 1 month, or we'll call it 4 weeks, circulation has only dropped about 6.5%, while prices doubled that at about negative 12%. So the price is currently dropping, or I should say it has been dropping, but circulation has stayed flat. And that can actually be a good thing because it means utility isn't dropping at the same rate as price. And that can create at least a mild divergence. Ideally, we want to see something like this where circulation is going up here, but price is actually moving down. So if we start to see an uptick while prices stay suppressed, that would be a clear-cut bullish divergence, indicating that circulation and just overall utility is starting to rise, but price has not caught up with it yet. We also have a model here. I know many of you would like to see how our NVT model is looking, and I can show you. We'll zoom in just a little bit here. For the month of January, we're not quite seeing the amount of circulation that we would want to justify current market cap conditions. The past 3 months, we saw semi-bullish indicators indicating that we can start to rise if this trend continues. This is very zoomed out, so understand that sometimes price will drop even though circulation looks good. But as of this month, through at least the first 13 full days of crypto, we are back in bearish territory. It doesn't mean things will stay that way, but at least halfway or close to halfway through the month, that looks like where we're at. Notice these last 3 hash marks, though, indicating the last 3 days. These are all better than the average for the month. So that's encouraging, and it means that things are starting to drop down. And if this bar starts to go below these little trend lines here that I'm highlighting, the yellow and orange right here, that will indicate that we are getting back toward neutral, which would be what we'd be rooting for if we're a bull in the market right now. But as of now, not as good as we would hope. So circulation, as I said, it's mostly staying flat with the prices where they're at, and we'd need to see a little bit more for things to look justifiably bullish. And then going back to the other utility metric, which would be daily active addresses, this indicates the amount of unique addresses that are actually being used on a daily basis for the Bitcoin network. We, of course, have this for many other assets like Ethereum, Binance Coin, Litecoin, and many ERC20s. But in terms of Bitcoin, it's pretty much the same story. It's been a very mild downtrend, but not a huge drop off. So mostly staying flat. I like to add a 30-day moving average for this one. And you can see with this pink line, it's basically showing a very mild decline where over the last 30 days, the average is around 919,000 daily active addresses. So even though that isn't quite at the peak that we saw right at the all-time high, where it was at about 983,000, it's not anywhere close to where it was back in July, which was only 805,000, actually got down to about 783 in late July. So not a huge drop off. We can also zoom out and we can see the perspective from where it was a year ago. And a year ago, we were well above 1 million. And when Dino was doing these calls with me, he was always a big proponent of that 1 million active address mark and how that's an important threshold to really indicate that prices can jump back up. So if we see over 1 million, the last time we were there consistently on this trend line at least was right around early June. And it hasn't recovered to this level since. It tried to get close here. It was on the rise a little bit, but this short spurt of daily active addresses quickly dropped back off as the price really fell off a cliff here right around the end of December. But if we start to see that rise again, look for 1 million as that mark that we're starting to really get back into bullish range, and it's time to scoop up some Bitcoin or any asset because of the fact that Bitcoin is looking bullish again. I'll talk about some other metrics here in a moment, but I think this would be a good time to give Yura the floor here for 5 to 10 minutes to go over some of the latest and greatest things that he's been working on. So Yura, if you want to jump in, we can either have you share your screen or I can share along as you sort of guide in terms of where I can go.
Yeah, we can try. Do you see my screen, Max? Ryan?
I see that mine was disabled, which is a good sign. That might mean that yours is up. I see it up on our Skype call. So if Balresh can confirm, or the audience, that would be great. Perfect.
All good. Yeah, great. Then, yeah, I'm actually excited to be here. I was on one such call maybe many months ago. I don't remember when, and we've delivered a lot of new features, and I think it's crazy to say about everything. And I just talking about very small features right now, very small, like three topics about alerts, about our new NFT data set, and some sharing stuff, how to do. Before, I want to say, like, right now in Santiment we have like really new and crazy, like, growing DeFi team, sidechains team, and we have a lot of requests about sidechains. I know there is a big topic that Ethereum liquidity right now spreading between different sidechains, Avalanche, Solana, etc., etc. We will have supported, like, I promise. It's question only about time. Right now, if you know, we have a Polygon dataset, and on our app.santiment.net you can looking for Matic, or you can looking for P-Matic, and P-Matic, it's a on-chain data for Matic on Polygon. It works right now. Also, we have NFT dataset on Polygon. We have OpenSea marketplace. I think OpenSea is the main marketplace. You know, MetaMask even using OpenSea as a first source of truth for images. And if you have broken image on OpenSea in MetaMask, also your NFT has a broken image. But anyway, like, let's start to show you a couple features which I want to show you. Alerts. We rebuilt alerts from scratch. It's absolutely new UI, maybe last month, and it's pretty fresh. We have some technical issues. If you see these issues, please contact our support channel, and using Intercom or using support on our Discord, we can help you as soon as possible, and our product guy can also talk with you about how to make our user experience better. On our platform, you can do alerts for different entities, for assets, for watch lists, for screeners, for wallet addresses, and for social trends. It's hard to find social trends, but I think I can show this. It's a cool stuff. Brian started his talks today about showing our top trending words, and I hope everything from you know about our top trending words, our AK Google trending words, but for crypto world. And if you have watch list on Sunbase, you can create an alert which notify you if any asset from your watch list will be if any assets from your watch list appeared in our top trending words. It's interesting. For example, I can do this for my portfolio watch list. Next step, I can select notification source. For me, the best way is Telegram channel. And the last step, it's a private, name is good, create alert. And right now I have alert, it works, and each day if anything happened in social world and in crowd, I can see like this for my personal portfolio, it's cool. And you can try to use it. Try to use our alerts. That's the first thing which I wanted to show you. The second thing is sharing option. Our charts tool, charts layout tool, there are different names which we give this tool, growing and change features all the time. And maybe not all of you notice very small things like embedding chart. It's possible right now to embed the chart with any settings. For example, we can show, I don't know, like MVRV, MVRV is 1 year for Bitcoin. And I want to share this particular chart to my personal blog or to my personal dashboard for my traders. There are two ways. One way, if all of your traders have access to Sunbase, you can just click to share button, copy link and sharing this link, it works. But also, if you have your own blog or you have your own internal website dashboard, you can integrate our charts in your dashboard using iframe. We have a couple settings. You can choose which chart, you can choose width, height settings, night mode, Cartesian grid, several settings. Just copy, paste this code. And for example, we can try to do on JS Fiddle. It's a playground for JavaScript. Click and that's all. You can see the chart layout in the separated web page, and I hope it is. Some of our customers right now are using it, but I know it's super hidden feature, and probably not all of you knows about it. But try if you have some use cases, if you have your blog post, if you have your website or like internal dashboard, it can give you really good value. Okay, the third topic about NFT. NFT is, it's a huge topic right now. And again, if we return to Brian's talk at the beginning, and when he showed top trending words, in our top trending words, the first place, Journey Club, and Journey Club, it's an NFT. It's actually pretty old NFT, if I remember. But anyway, I don't know why it's trending right now, but you can use our trending words if you're flipping NFT to understand what is hot right now. About NFT data was really hyped last August, and the new wave is right now. Maybe not all of you notice it, but and in August we didn't have any data set, and only Dune Analytics and Nansen can give this data for you. I like both platforms, but I think we have right now some core stuff, and soon we will have much bigger features around NFT, because we also have social. It's like the main thing, because to be honest, like NFT, it's all about like flipping and like growing right now, and crowd is a very important part of everything around NFT right now. Let's back to what we have right now on our platform. First of all, we have some new metrics. This metric is not in on-chain NFT Harbor category. NFT Harbor on-chain data available for any assets, It's not related to any particular asset. It's like a global metrics. And we have several groups, like three groups right now, like total NFT trades count, total NFT trades volume in USD. All this data set combines on the main marketplaces on the main network and on Polygon. On main network, we have Rarible, we have Foundation, we have CryptoPunks, of course, also OpenSea, like the main player here, and on the and we have different version for Rarible. If you know, like there is not one contract, there are several like different versions right now on the market. And also on Polygon network, we have dataset for OpenSea. That's what we have. You can look at the data, and you can see in the August it's a top peak, and right now pretty the same situation. And yeah, the second chart shows like labels related to NFT players. We divided all players on two groups right now, not so big. In-house, we are doing some research and doing some labels research, but on the public, we give you two groups right now. One group is it's a address, unique address. If this address bought more than 100k USD of NFTs, different NFTs, we label this address like I don't know, like legendary whale NFT player. And the second type of player is if this address bought or traded less than 1k USD. It's like a small fish. And you can see then big guys traded a lot at the end of August and traded a lot at the beginning of this year. Pretty the same on the level, but between this August and January, activity of big guys not so big. And right now, they look at the market, and it's interesting. But if we look at small fishes, they're playing pretty on the same level all the time, a little bit less activity during November, but maybe it's related to holidays primarily. The average level pretty the same that we had in August and we have now, maybe now a little bit bigger, but yeah, it's like a new wave of NFT, and it's the first data sets which we have on Santiment. We're working a lot right now on NFT data sets, NFT data, and soon you will see more. The second thing which you can try right now, it's a NFT influencers table. NFT influencers table, you can find this table on the homepage of Sunbase. You can going inside. What is that? We have huge social data set, and we're starting to connect between social accounts and wallets. Right now, social accounts related to NFT, we have in our dataset around 30,000. This number is growing. But for NFT influencers, we picked up manually around 100 accounts. All players, if you flipping NFT, you should know, like Pranksy, you can check here. And in this table, you can see in real time when any of Twitter or Reddit NFT stars and influencers start buying or sell on OpenSea, on Foundation, Rarible, on any marketplace which we support. You can see in real time what they're doing. They buy or sell which NFT collection, and it's all about on-chain data. It's true data. I hope it can help you for flipping, but it's not the main priority. Our main priority right now is experiment around NFT data and understand how can we help all our like customers, because it's not only about like flipping, it's also about like some long-term investment and to understand this. Like we are playing with NFT data, but if you want to try, you can try this table right now. Please sharing any feedback to our Discord channels and support and feature requests, or in Intercom. I think that's all from my side. Yeah, Brian.
Awesome, Yura. Yeah, this is really awesome.
You.
I really love seeing that you can visualize how many transactions over time on the NFT side people are making, seeing the increase in $100,000 NFT purchases over time. That's really good stuff that I think gives people a lot of perspective on how NFTs are looking at any given moment. So I really encourage you guys to check out the dashboards that Yura just presented there.
Yeah, I hope.
Yeah, fingers crossed. You guys definitely should check it out. Balresh, if you can confirm that my screen is back up and showing, that would be great. Excellent. There we go. There's the full screen. So going back to some Bitcoin market analysis now, I wanted to show off whale activity a bit earlier than usual in the show, because it is a popular metric, of course, with a pretty nice leading indication property to it. What we're looking at right now is the amount of Bitcoin held in terms of the percentage of the supply for addresses holding anywhere between 100 to 10,000 Bitcoin. For those of you who want the USD equivalent of that, that would be anywhere between, at this time, around 4.2 million to about $420 million in actual monetary amount held. So these are obviously quite rich and wealthy addresses that we're looking at. And as you would expect, they have a pretty large pull and weight on where the markets will head next with any given move that they make. And we can kind of see how well it's reflected just over the past 3 months, where they've really sort of taken profit ever since the end of October, where they peaked at sitting around 49.48% of the supply held, and they are now sitting down at about 48.5%. So just under 1% of the supply has been shed by these whales, which may not sound like a lot, but trust me, it's a lot. It's in the billions, I think tens of billions of dollars. Maybe ones of billions. I'd have to do the math, but either way, this is irregular for the whales to shed this much of Bitcoin in about 3 months. And we can show this by changing it over to about, let's go the last 3 years. So this is more of a zoomed out perspective, and look at how much the whales have really accumulated, especially since around July 2019, when they were at their base of about 44.95%. If I drag this, go all the way over, the whales over the past 2.5 months, or 2.5 years, I should say, have accumulated about 3.5% of the supply. That is a ton. And so when you see a drop of this magnitude, which we really haven't seen since, it's larger than this one here. So the last time we saw this drop was really in May of 2019, all the way until July, over a 2-month stretch. And when we saw that, you know, the price was still declining, but look at how it dropped off here. It's a bit dwarfed because of us not being in a logarithmic scale, but this was a big drop off that occurred kind of toward the end of this dumping by the whales, and eventually they started to accumulate again. And really what we're looking for is something like this, just a nice sustained accumulation over time. And eventually, if you see this level of accumulation, yes, this was a big drop here, but eventually it was scooped right back up. The prices will typically rocket launch shortly after, or at least after a long enough period of time of whales accumulating. And especially look at right around here, right about a week before the all-time high then, in mid-April, they really started to take profit just before things started to spike and then drop off a cliff. before the eventual huge retracement that started in May and ended in July before rebounding. These whales will tend to accumulate the most after prices fell off a cliff, and they haven't yet done so in this latest drop like they did back in late May. It's still showing signs of a decline right now. So that's a bit of a concern. It means that whales aren't quite tempted to pick up all of the panicked sellers Bitcoin just yet, and that could lead to a little bit of further downside before whales say, okay, now is the time. They may be waiting for under 40K. It may be more of just a timing play for them where they're planning to do a bit of accumulation in the end of the month or in sometime in February or even longer. It's impossible to really predict. But when they do start to accumulate and we see like a pretty decent uptick that might look like that, that will be the signal that if you do believe in the whales controlling the markets, which we do here at Santiment, that would be the time for you to jump in yourself and start accumulating more. But there are plenty of other opportunities in the short and midterm that you can take advantage of if you are less of a macro trader and more of a swing trader. And that's why we have things like funding rate. I'll zoom in again here. We'll look at the last year. And I'm just showing Binance's funding rate between January of last year and January this month. So we're looking between January 14th, 2021 until now. And around that time last year, or this time of the calendar year last year, we had major longing going on. This essentially means that the leveraged trades that were happening on Binance with USDT, Bitcoin pairings in particular, lots and lots of huge bets on the price going up were occurring. And these traders were actually spot on for about a month. We can see it actually got all the way up to about 0.058%, which is a very, very large funding rate percentage before things, before things eventually really dropped off and suppressed those longs for at least a little bit. Many liquidations happened around here. And that tends to be what happens when funding rate gets too extreme. Notice how once it started climbing, those long spikes started to occur again. We'd have mini retracements, and look at how all of those long liquidations occurred once again, and people were not leverage longing for a short time until the bounce. So there was just a lot of reacting to the markets. And as soon as things started to look like they were taking off again, we'd see these huge long spikes. And eventually from that all-time high then in April, many liquidations happened. We had one more wave of longing spikes before it dropped off a cliff, and then people were in some pain, and we stopped seeing the huge leverage longs in comparison to leverage shorts that were happening in the first about 5.5 months of 2021. And then we went into a negative cycle where people were actually betting against the markets. And for a little while, they were actually correct. People who stuck with their shorts and weren't liquidated toward the tail end of this slide were pretty nicely rewarded if they closed their positions. But eventually, these shorts got liquidated as well. And that tends to be the cycle. The leveraged longs get liquidated, and then the leveraged shorts get liquidated. But people who are able to do short-term versions of this and actually close out their positions without getting too greedy, they can actually take advantage of the markets. But really what this metric shows more than anything is how people are perceiving the markets and actually putting their money where their mouth is. So it's not just the amount of social mentions, which I'll touch on next, but the amount of actual money going toward shorts or toward longs. So the money was actually going very much toward shorts at this time, and then they were finally liquidated. And we hadn't really seen any serious shorts going on since. We did have this short-term cycle of shorts that happened in late September for about a week, and the mild amount of liquidations happened then. And of course, we had major price surges going on all the way up until the latest and true all-time high of Bitcoin that occurred around mid-November. And then eventually these longs were liquidated, fell off a cliff, And look at how just recently, over the last 4 days or so, 3 days or so, we're now getting negative funding rates again on Binance. And that's a good sign, obviously, because historically speaking, when we start having this level or below of funding rates going negative, that tends to be used as rocket fuel for prices to be able to rise. It would be nicer if it dropped a little bit lower to some of the June levels that we saw, but all things considered, in a vacuum, this is a better time than average to be long because of the amount of leveraged shorts that seem to be overwhelming the Binance leveraged trading market right now. And we can look at it not just from Binance, we can also see the average funding rate of 4 different exchanges that we have data on. We have Binance funding rate, Bittrex, FTX, and of course our brand new one, DYDX exchange. And you blend those all together and you can see all 4 of the funding rates in an average perspective. So this gives you a little more of a macro view that isn't so focused on just what's happening on Binance. If we do look at just one, Binance usually is the best indication simply because it's the largest market, but this adds a bit of extra trading sentiment to the pot to give, in my opinion, a better perspective overall. And this shows even more of a negative sentiment. So on Bittrex, DYDX, and FTX, there's on average a little bit more negative funding rate going on than Binance. And so including them shows us that we're at about the 4th most negative time over the past year in terms of funding rate. And that could be very, very good if this trend continues. It is starting to tick up a little bit. So the people who were negative just a couple days ago on the 12th, they started to capitulate a little bit after the price went down a little bit more. So some profit take might have happened right around here, but we're still in a more negative spot than average. And that's a really nice sign if you're a believer in funding rate, as myself and most of the staff here at Santiment are. So that's a little bit on the funding rate. In terms of other just overall social mentions. So what we're looking at here is the positive versus negative sentiment of Bitcoin in terms of the total mentions on the 5 platforms that we scrape data on. Those 5 platforms would be Twitter, Discord, Telegram, Reddit, and some various pro traders chats that we have access to. All public data, all public chats that anyone can view. It scrapes using a proprietary algorithm the mentions related to Bitcoin and whether people are using terms like bullish or bearish with them. You know, things like I just sold would be classified as negative. Things like you better buy this dip would be classified as positive. And it gives you what we're looking at right here. We're looking currently at a 12-hour perspective, but for convenience with this level of time frame, looking at a year, I'm switching it way over to 1 week. So every pink bar here is showing 1 week of overall data showing the ratio between positive and negative sentiment. We can see that it peaked here in late October, which was about 10 days, 8 to 10 days before the all-time high that occurred on November 10th or so. And right after that, things dropped off a cliff. That tends to be what occurs. We'll see like a huge, overwhelming amount of euphoria, either right on the all-time high or a major local top, or about the week before. In this case, it was the week before, and then we really fell off. Notice how things were still in positive range all the way up until this past week, where things really started to look pretty grim for the price of Bitcoin. So everyone was saying, all right, folks, you know, pack it in. It's time for the prices to drop below 40K. And guess what? It never did. It got close to dropping below 40K. But those who were in major fear mode right here and, you know, projecting a lot of FUD in the overall market sentiment were kind of tricked here. And the price had a very mild bounce. This wasn't a huge bounce, but it was enough to, over the past couple days, push sentiment back into positive range in terms of just the ratio between positive and negative comments. Now, of course, remember that these are just comments. So people may say they're super bullish when in fact they're still taking profit. If they're a major influencer who thinks that they have some pull on what others do, which many of them absolutely do have some pull, they may say one thing and do the other. And we have no way of knowing unless we're looking at things like funding rate or something like SANR, where more and more participants are actually putting their public trading on the blockchain in order to win crypto prizes. If we have time for it, maybe we can show that for a couple minutes. But overall, it's showing that we're at least mildly back into positive range, but not by much. This would mostly be considered neutral by most historical measures. And overall, it's looking okay. We'd ideally want to see people getting super fearful once again. And even with this minor spike, it's surprising to see that people are now getting positive once again, but it isn't severely positive. So we'll leave it at that. And I wanted to pause really quick just to make sure that Gary or Balresh announces that poll so that in about 10 or 15 minutes, we can look at a few altcoins.
Oh, we actually already have first results. So whenever you're ready, we can head over there.
Yeah, let's wait a few more minutes so I can look at a few more metrics and jump into Ethereum. But right around 10 minutes or so, we'll go into a few of those altcoins. A few other things I wanted to show here on the Bitcoin side. Average MVRV. Many of you who have tuned into previous calls have seen us analyze like the 30-day MVRV, which is kind of a mid-range swing trading type of average return metric that gives you perspective on how much profit or how much pain, loss the traders are experiencing at any given time. Generally, anything over about 15% on that 30-day MVRV is considered to be kind of toppish. Anything around negative 15% is considered kind of bottomish. But in terms of the average MVRV, I like to look at, because we're combining the 1-day, 7-day, 30-day, 90-day, 180-day, and 365-day MVRV, I like to look at right around 0.15 on this chart. And that would be right here. So anything above this line is what tends to be toppish. And then anything below about, I think it's negative 0.075. These are, of course, just arbitrary numbers. But I've seen enough historical evidence to point to the fact that these are around the ranges that really show a lot of bottoms and tops occurring. We can see when things were above, look at how a correction occurred here, a correction occurred right here, very minor correction occurred right here before it fell back below that line. And then right at the top here, look at all this chunk. You would have been just fine kind of taking profit anytime when it was above this line. And then, of course, right before the all-time high, I think like the day before, it got well above that line here. So this is a pretty nice indication of when things are looking a bit too toppy, and it tends to correlate with a lot of euphoria and greed from traders when they're well into profit territory on the Bitcoin network. So right now, of course, we've fallen off from that positive territory. We're well under this line showing that people are actually in pain right now and are at a loss in terms of the overall average MVRV. And we are indeed below this negative 0.075 line, indicating this is a historically painful time for traders in terms of their returns right now. And that is a good thing if you want to buy into others' losses. So adding onto your position right now is historically of less risk than it usually is in terms of where the price is for Bitcoin. If it jumps back up above this line, that isn't necessarily a bad thing. It means that we're no longer in like a really, really great spot to buy. If it jumps above this line, then you're starting to get into buying at a higher risk than usual territory. So keep that in mind. This is a very good sign, one of the best indicators we're seeing on Santiment right now, because objectively speaking, when combining all of the different time frames of note for traders' returns, this is a very good time to buy. So with that, let's jump really quickly into Ethereum for these last 5 minutes here. Beginning with circulation, we can see there's been a bit of a drop off. This very last day is the current day, so ignore that. But even without that current day, look at how the trend line has started to drop. I'll full screen it really quick. Yeah, so we got up to about an average of 1.18 million ETH circulating back on November 21st. And on our last full day, the average is down to about 750K. So that's quite a drop off there. Looking at NVT, we can see that just like Bitcoin, so far in January, it's been a bit grim. There is not nearly the amount of circulation going on right now to justify the market cap that Ethereum is at right now. Of course, circulation is just one of many metrics, so this doesn't necessarily mean that prices are going to drop off a cliff. We can obviously see that for the 7 months before this, we were in semi-bearish territory, but the price was able to chop and sort of dig its way up to that eventually all-time high in November. So by no means does this mean that, you know, if it's showing bearish or semi-bearish, things are going to drop off a cliff. But look at what it does when things are in green bullish territory. Absolute rocket launch in most cases when we're getting an overly justifiable reason for the prices to climb in terms of circulation. Even back here in 2017, look at how prices did when we were seeing mostly green bars going on. So Ethereum, not looking so hot on the circulation side. In terms of daily active addresses, pretty much the same story. We are seeing a bit of a climb in the last 3 days, which is nice to see. The 13th was actually the best day in terms of daily active addresses since December 5th. So around a 5-week high there. Circulation is looking maybe very mildly better than, or I'm sorry, active address is looking very mildly better than circulation right now, but not by much. It's mostly considered flat right now. Weighted sentiment, similar to positive and negative ratio, I can tell you that's looking very fearful right now. So a good sign if you are trading against the crowd and you're seeing that there's this much FUD going on. That's a nice sign that most people do not believe Ethereum is going to go back up. In terms of whales, Ethereum's a bit hard with whales. If there is any argument, I'd say it would be around the 100K to 10 million address line. And that has been going up for the long term, beginning in late September until now. But over the last few days, we're starting to see just a little bit of profit taking going on. So not the best sign there. In terms of average MVRV, I'll do that as the last metric for Ethereum before we jump into altcoins. Looking pretty similar to Bitcoin. Let me draw that negative 0.075 line. Give or take right about there. So we actually just went above it in the last few days, but still overall in a vacuum, traders are in pain and trading at a loss right now. So better time than average to buy. Not quite in the extreme territory, just outside of that extreme territory. But all things considered, it's a historically less risky time to buy Ethereum according to the average loss that is occurring with most traders' portfolios. All right, that'll wrap up a quick Bitcoin and Ethereum synopsis. Next time, I'll try to do a little more Ethereum analysis to make up for the very short time that we spent on it this week. But want to make sure there's enough time to jump into some altcoins. So Gary, or Balresh, go right ahead.
Okay, the first in line is Convex Finance, CVX.
CVX. All right.
Yes.
So CVX is an ERC. No, is it an ERC20? Yeah, it's a smaller. Yes, it is a smaller ERC20 asset that we have some data on. Not all of our metrics, so we don't have like MVRV, but we do have circulation. So let's take a quick look at that. I'll zoom into the last.
We don't have MVRV intraday, but we have MVRV like daily.
Aha. Thank you very much. Good to know. I would not have checked for that. So MVRV ratio I'll add here, and I'll do that in just a moment. Before that, let's look at circulation really quick to see what kind of utility we're seeing for CVX right now. Overall, not much of note. Over the last 3 months, we've had our share of spikes. We can clearly see that when there is a huge circulation spike, contrary to what you'll see with Bitcoin and Ethereum, we'll often see a lot of tokens kind of moved at once, and this appears to correlate with profit taking on the whale side, which is why prices tend to retrace during most of these big spikes, even if it's a very small retrace. Usually the day or two after these big spikes occur, we'll see at least some drop off. In this case, from right around the time Bitcoin and Ethereum and many assets hit all-time highs. Convex, of course, did not, but it did take a big retrace over the next week after that very euphoric time in crypto. And then again, here we saw a very short pullback followed by a big bounce that was not related to circulation, clearly. But overall, we're not looking at any significant circulation right now. So not anything of major note there. Let's take a look at daily active addresses before looking at MVRV. Kind of the same thing. We had, interestingly, right around New Year when it hit its all-time high on the New Year. I believe it's the all-time high. Let me make sure I'm fact checking that. Go back to 2018. Yeah, it definitely was the all-time high. Yeah, it was. So daily active addresses had a big spike right at the all-time high. There was one other big one before that on December 23rd that also correlated with that big drop off, just like circulation. But right now, daily active addresses are not showing anything of significance. So this price pump that's been occurring since the 10th doesn't seem to be related to the overall amount of utility happening on the network. We'll look at whales in just a moment, but first we'll look at MVRV, because I would bet, I would bet that there's some correlation there. Yeah, okay. So we had this big dip where traders on the 30-day range were trading at a loss. It wasn't a significant loss. Like I said, for the 30-day MVRV, we look at right around here as that huge buy opportunity point in most cases, no matter what asset you're looking at. And historically, that's spot on for convex. When we go into extreme negative territory, that's when prices tend to jump up. Extreme negative territory here. This actually was the price bottom for at least the last month or two. And then we had this huge jump of what looks like a price jump all the way of, yeah, it 3x'd. It jumped 200% between December 3rd and January 1st. So if you were looking at the negative MVRV here that was going on at an extreme degree, this would have been the time to buy. But we jumped recently into negative territory between the 7th and the 10th, and it looks to have been on quite a run since. It didn't ever go into extreme territory, but it got very, very close to it. And now we're back in positive territory, but it's not at an extreme positive, which would be right around here. And until we go up to that line, I wouldn't feel too worried about convex correcting, but it is in positive range. So it's in a mildly concerning territory now, just nothing like it was back here in late December. Now we'll look at whales. Check that out. Hopefully we have whale data. The price is 20-ish. No, it's all the way up to 45-ish now. So I'm going to keep that in mind as I try to find the best tier for whales. So we'll take off 100 to 10,000. Generally speaking, we like to look at the anywhere from $100,000 USD all the way up to about $10 million for most altcoins, especially if they're smaller. So that would equal, if I'm doing the math right, around 10,000 to 1 million. Let's take a look at these two tiers here. Okay, that looks to be, let's zoom out a little bit. That looks to be a pretty good, nice leading indication that has historically followed prices or led prices fairly closely. Going back all the way to last year, we can see, okay, so this really is only about a 8-month-old asset in terms of public trades, more or less. I'm sure there was a little bit of a time frame before that, but overall, it looks like it really started to have exchange volume as of about 8 months ago. And we can see that the first wave of whales taking profit occurred right around June 4th. And look at how about just a day or two later, the prices really dropped off a cliff. And then once they did drop off a cliff, right around June 10th, this is where the accumulation started. And the accumulation went all the way until November 10th. And look at how on November 10th, there was a huge profit take by the whales where they shed about, it went from 7.25%. If you're looking at the top left bubble here, it went from 7.25% to 5.38%, almost a 2% supply shed by these whales overnight. And the prices dropped right off a cliff. So looking at this, I can tell that whales play a very heavy hand in where prices go next. This is probably the best leading indicator for convex that we have. We can even see another huge profit take that occurred on December 7th. And there was a minor drop here, not nearly what we saw back here, but it was enough to push the prices down. And then they quickly started accumulating again. A little bit of volatility here, a huge accumulation here. So if you saw this line on December 29th to the 30th, you'd note that prices were likely going to be propped up, and that's exactly what happened. And on the last day of 2021, we hit that all-time high of 55.70, and immediate profit taking occurred, sending the prices back down. And now we're in an accumulation pattern once again, and prices are starting to go back up. There's no guarantee that they'll continue to go back to that all-time high, but it's a good sign that whales aren't showing any serious signs of profit taking right now, and they're getting close to that all-time high level of supply held. So that's quite interesting. It means that whales are quite optimistic about convex right now, and they hold about 7.3%. So this isn't a heavy, what's the word I'm looking for? Centralized is the word I'm looking for. It's not a heavy centralized token in terms of whales holding like 80, 90% of the tokens. It's under 10%. So this is a pretty nice indication of the large retail traders and what they're doing right now, and how they're able to impact the markets is pretty evident here. So yeah, we'll leave it there for convex and see if we can get in a couple more altcoins. So go right ahead with another one, Balresh.
The next one in line is Phantom FTM.
All right, very popular asset. That's been seeing some serious positive movement, I know, over the past looks like the past 3 weeks or so. So let's zoom in. We'll do the last 6 months for now. On the circulation side, we're seeing man, the difference between Dino being here or not is evident because my voice is starting to peter out a little. So sorry if I'm crackling up here a little, guys. Circulation. We are seeing a pretty flat amount right now. We're not seeing a huge amount of utility, even since the 3-week surge that we've been on. That's a bit concerning. That means that there's probably a bit of a bearish divergence forming in terms of what NVT would look like right now, because circulation is staying flat while price is rising. We did see some heavier circulation going on back in September, right before the big retracement, and then things started to pick up in circulation, but we're not seeing a similar pickup this time around, and it might be related to the fact that, unlike back in early October, Bitcoin and the rest of the markets are kind of struggling a lot more right now. So there's just less overall participants in crypto right now compared to what we were seeing in Q4 of 2021. On the daily active address side, it's looking a little bit better. We've been seeing some spikes occurring on the 12th and 13th that correlated what looks to be with the local tops. So just like convex, we're seeing that some of these utility metrics, when they really spike, it actually leads to some corrections occurring the day they occur. We saw back here on November 25th, big retrace on October 25th all the way to the 27th, big retracement right after. Almost every single one of these big retracements correlated with a big daily active address spike. So it's very likely that these are correlating with whale profit taking going on. So overall, the trend of daily active addresses on the 30-day scale looks pretty solid over the last 6 months. You know, mid-July, we were seeing 331,000 daily active addresses on the Phantom network, and now it's up to an average of about 1,643. So around 5 times the amount of daily active addresses compared to just 6 months ago. So that's a very promising sign that Phantom is being utilized and traded a lot more than what it used to be. Weighted sentiment, nothing really special here, pretty flat. So that's actually of note because it means that it's just not being talked about much, even though there's this huge price surge of 130% over the last 3 weeks. It's not really seeing a lot of polarizing opinions like it was back in August, September, when we were seeing some serious euphoria. Don't pay too much attention to like a 1 or 2 day spike in euphoria. These are usually just caused by like 1 or 2 big groups that might suddenly decide to talk about it and then it drops off again. So it's under the radar for sure, and that's interesting. In terms of whales, so price of Phantom is sitting right now at just over $3. So the best group to look at, if I'm doing the calculations correct, would be about 100,000, because it's going to equal about $300,000 all the way up to $3 million. And I'll even go $3 million to $30 million. Combine those, and it's looking so-so for what whales are doing. There's a little bit more centralization in in how much the whales own in terms of the overall supply of Phantom, but 30% is not a concerning amount. It's nowhere near like that 50% or more metric. And so this group of whales definitely has some leading indicating properties. And we can see very clearly, like going back to late August, when they showed their first, at least in the last 6 months, their first serious sign of accumulation. They went from between late August around the 29th, they had 28% of the supply and went all the way up to 31.6% of the supply. And then they started to profit take, and look at how the price followed that profit take down until the accumulation started again on September 22nd. And this would have been an indication of another cycle of bullishness that it looks like the whales took probably a little premature this time, because prices continued to soar up and they were actually profit taking as the price hit what I believe, I'm going to confirm once again whether that was an all-time high. Yeah, it was definitely an all-time high on October 28th. And they were profit taking all the way back about a month and a half before that. And they were not the traders responsible for this all-time high at all, because they were shedding supply over that month and a half. And it looks like they started to accumulate right before the drop-off, but sort of a drop-off, because it was already dropped off plenty before then. But this big drop-off, they were already accumulating right before that. And now they're in what looks to be kind of a mini accumulation phase. So overall, a better sign than average. And we're seeing these huge spikes here occurring. So we'll see how this tier reacts to the fact that we're getting this second spike wave where we're above $3 once again, and whether they start to do another profit take. Hopefully nothing like this, but if we see kind of a gradual rise like this one, that would be a pretty nice sign that we're going to make a run at Phantom's all-time high once again and go beyond that. The overall whales are looking good. Since that's not quite as clear cut as convex, let's see if there's one more metric that we can focus on. I think MVRV would be a good one. Funding rate as we pass it looks to be fairly neutral, nothing too significant there. MVRV 30-day. Overall, yeah, that's actually, okay, we're in a pretty significantly high range for MVRV because 15% is right about here. Negative 15% is right about here. So Phantom swings a lot. They go well above and below the normal 15 and negative 15% range. But over time, the older an asset gets, the less you'll see crazy swings like this because the trading volume improves and increases, and there's more traders to prevent just absolutely wild swings that usually only happen at the very beginning of an asset's public trading. So right now, we're sitting at about plus 21, a little over plus 21% for the 30-day MVRV, and that would be considered a concern. Usually when you're above that plus 15% line here, you'll see retraces like this, or like this, or like this, or like this. Look at how they all occurred when the MVRV was above that 15% line. This one looks like it was a little premature. This one was very, very clear cut, where the MVRV was super high when it jumped over $3 last week, and then it went into it actually did go into negative territory, and that marked a bottom, and now it's back up again. So overall, I'd call this a bearish indicator because of the fact that we're above 15% again, and the price is up near what it was last time. So we could be seeing, based on history, another big retrace occurring in the near future, unless people profit take prematurely to send the MVRV at least back down to this range. Overall, Phantom looks to be pretty neutral, but if the most clear-cut indicator I see is MVRV, and that's bearish. So I'd call this kind of a yellow flag asset right now, especially considering it's really decoupled from the rest of the markets over the past week. And without Bitcoin going up in the same fashion, it's something you have to be cautious of. Okay. What time do we have right now? Yeah, we're about 20 after the hour. So we'll end here. For those of you who didn't get your altcoin answers, drop them to me on Discord, and myself or another staff member will help give you a little more analysis on what we're looking like for that asset. But before I go, I want to give Yura the floor one more time to see if he has anything else to add, and then we can conclude.
No, I don't have.
Awesome. No
Yeah.
worries. Okay, so we'll wrap up here, guys. I want to thank you all for joining today. It's been kind of the wild, wild west in terms of how the markets have looked, with Bitcoin and Ethereum being pretty neutral, but altcoins really dancing all over the place. Many performing great, while many are performing not so great. It isn't nearly as uniform as it was in Q4 of last year, where altcoins were kind of all going up together or all going down together. So this is more or less one of the best times to really have these kind of metrics at your disposal, because you can identify through these kind of metrics, or like through the screener, which assets you should really be focusing on and allocating your portfolio with accordingly. So make sure to use that screener link that I dropped in the chat earlier in this call. Use the infographics here, get that price bar chart up, use the filters so you can see like, certain assets that might have extremely good development activity right now, or daily active addresses. Obviously MVRV we love, so like click on something like MVRV 30-day and find out which ones are below 15%, for example. That can be really, really helpful. And that'll help filter out a lot of the assets that aren't showing huge opportunities right now. You can sort by market cap here, and really find the ones that are below 15%, which there are a lot of right now. And hopefully all of these things together can help you guys out. We're here to answer questions. Make sure to take advantage of that referral link, which you can open and set by going to your account settings. And you'll get 25 to 35% of the cut upon anyone else's sign up for Sandbase Pro for their first month. So take advantage of that. And all that being said, I want to wish you all a super happy and healthy weekend. And we'll talk to you next week for another This Week in Crypto stream. Thanks so much, guys.
Great. See you.